Great morning, fellow traders. This is Austin. It is FOMC Wednesday, October 29th. And I wasn't going to trade. I had plans to be outdoors doing a bunch of things. It's raining. The weather's a little bit inclement. And that and the Russell or stocks initially early this morning gave a buy signal. You know what, we'll nix the crude oil chart because it's doing nothing. Crude's in a major funk lately. I expect it'll release from that soon. So anyway, they popped them from inside the open range. The buy signal is around 1147 or thereabouts on my chart, and then they took them up to the 233 early, and then they've done a quick reversal. They've done a quick failed up and possibly successful down.
Order
So now
pending. Order canceled.
I'm going to see if I can catch one move here ahead of the FOMC event. And I am interested in working in the afternoon with the Russell only, probably about 2:30 onwards. Let the first 20-30 minutes, rattle itself out, and then see what happens from there. So what we have now is a quote counter trend short, and by that I mean price is still in the bullish zone. We'll zoom in a little here. This is a bullish zone, but crude oil has the Russell has given a textbook early reversal where it will come up with energy and hit its 233. And this is any market. It's not just the Russell. Any market known to man, stocks, bonds, commodities, currencies, whatever. When they peg a 233 zone early and then reject from there, many times they will go the opposite direction and hit the next 233. So this is definitely in play sometime today. The 1137 zone could be sooner than we think. So anyway, not trading aggressively, just looking to catch a move. I missed this one. I was not around. Some people in the team room caught it. I'm glad of that. We have traders who are very successful on their own, and that's the idea in our educational program. So is to create independent success. We don't want to create dependence. We love to have people stay with us for long periods of time if they enjoy our company and continue learning. But first and foremost, we want to foster independence, and we're doing that. So this is definitely in play. This is most likely right here, and I will most likely cover and be done if that happens right there, the 1145 area. So I will, aggressively trail a stop and see what happens. Moral of the story: holding for 1145 zone potential. Stick a stop in there, and if it just keeps on collapsing, that's good. And if it doesn't, then I would be done until past 2 o'clock with the FOMC report. It is now, let's see, 10:05. All right, it is 10:09, and the Russell's making its way down to the 1145 area, which we said would most likely be first magnetic. And then, of course, there's the coiled markets roadmap 233 down here off the open range. Highly probable to be hit after this one. This has 90% probability being hit, and it was early. And then when that happens, there's a strong probability that it's going to trade down through or up through in the opposite case and continue going. So that's that. They've already gone 50 ticks, so I'm gonna lock in. You can see where we're at from 1155. We're gonna go to 46.4.
Order pending. Order
Cancel.
canceled.
46.4. We can go to 45.4.
Order pending. Order canceled.
And that would be 51 ticks. And they have gone to where we said, bottom of the open range, and of course there's the usual ping reaction from there. Where she stops, nobody knows. Back to the 1 minute view. So, this is just textbook analysis. This is just technical analysis 101 from inside the open range out to the coiled markets roadmap 233, back to the open range, lower high. Can see where they did this just generic wedge, fell out of bed there, closed back inside the open range. Now they are, and then of course when they come back in, then the next thing they do is test the bottom of it. The reverse would be true if they were below the open range and then they came back inside, they would be testing the top. So top got tested and failed. Bottom's getting tested, is not succeeding. It's failing also. Maybe they continue lower. That's the moral of the story there. Nothing happening in crude oil right now. It's very muted. So I'm just gonna manage this 10 ticks at a time. As it wanders, if and when it wanders a little bit lower, then I will, trail down plus 10 more ticks and go from there. So it's kind of whipping right around there. While I pondered moving it down, looks like it's snapping back. To me, the difference between 51 and 61 ticks is negligible. I'd kind of like to see it go further towards the magnet, but it might not. It might just base right here for minutes or even hours, or even until 2 o'clock Eastern. Nobody knows. I'll take it down to 10 more ticks if given a chance. Looks like it's going to snap back out here. Yeah, she's tripping some buy programs that are always staged around the open range, or programs are always staged around the open range buys and sells, and programs are always staged around the coil markets roadmap values too. The levels aren't magic, they're pure math, which you could say makes them magic. It is what the market does. It is the roadmap of all markets. Like I said, stocks, futures, currencies, on the commodity side, everything. They all behave the same. So she's hanging around there. Looks like it is going to make a decisive move from this 44 zone here one way or the other. Which you can see is rattling right at where I would like to sneak the stop on down. If it goes a little bit lower, then I'm going to jam the trail in and settle for 61 ticks. This happens all the time. It's just random chance. And I'm like, okay, I'm going to, adjust the stop to whatever level. And invariably that level becomes the market's battleground. And then I'll jam the stop and immediately it'll run 5 miles in what was the favored direction as soon as I cover. Isn't that always the case? I'm sure I'm not the only one that experiences that phenom.
Order pending.
61 ticks.
Order canceled.
She's rattling there long enough. Works, continues on or it doesn't, we'll see. I'll leave the recorder on for a little bit here. It's probably going to be my mop-up recording for the day, so. And we'll just keep sneaking it down 10 ticks as possible. I believe it is headed for here eventually. Who can say when? So we're just going to lock in 10 at a time here until it knocks us out, if it doesn't already. That might be as far advanced as the stop can go.
Order filled.
Yep. That's it. Well, 61 ticks. Like I said, I missed 50 plus ticks on the way up, which if I had taken that, I probably would have sat idle and done nothing. But I missed out on that ride, so I took the second train. There's more days than not in a normal market normal market conditions, doesn't matter what symbol, as long as price action is behaving normally, you're going to get 2, 3, 4 chances at a solid trade. So you just got to be patient and, shrug off the ones that don't work and wait to execute the ones that do. And not every day is like that. Not every day can be a winner. Some days we just make personal mistakes. Some days could have been a winner if we just made other decisions or whatever. That's trading. It's all part of the process. So we do the best we can every day. We hope that the good days far outmatch the others, and by the end of the week or the month, there you go. So in the past, let's see, 4 sessions now. Friday was plus 62 ticks per contract. Monday was plus 10 ticks. Yesterday was plus 41 or 2 ticks, 42 I think, and then today is plus 61. So that ain't bad. That's about 17. That's about 170 ticks, about 17 index points in 4 days. I've had worse stretches. Well, in any event, maybe I'll work further into the FOMC this afternoon, and maybe I won't. We'll see. Depends on the weather. If it stops raining, I'll be outside. If it continues raining, I'll be back here. Hope this helps. See you the next time, and as always, best trading wishes.